Well, good afternoon, everyone, and thanks for having me. I'll start with the presentation. We've got a few disclaimers here. We've just recently released a scoping study, so it's a little bit detailed, but you can find this on our website. It was published today. So what we're looking to do here at Julia Creek is a dual commodity project. We're looking at the oil shale unit as well as the vanadium that can be extracted from there. We have a very well-experienced team, both in oil, with Tim Wall being our chairman. He's the ex-managing director of BP at Bulwer. Daniel Harris, who's probably the world's foremost expert in vanadium, sits on the board of AVL in Western Australia as well. Myself as the founder, Tony Pearson, ex-MD of HSBC in Hong Kong. So quite a strong board. And that's what's required to do a project of this sort of dimension. Recent corporate snapshot. We've probably had the most successful year process-wise that we've had. In January, we had quite a significant JORC upgrade, and I'll speak to that in a moment. We also had the sale of our renewables project to NL Green Power Australia. And of course, we just put out a pretty positive scoping study just a couple of months ago. Not being reflected in the stock market pricing at the moment, but I think that's across the board for a lot of critical minerals at the moment. So as you can see, we've got a very substantial resource. This is the largest inline resource globally for vanadium, and along with that comes about 700 million barrels of oil. So we've got two very timely products that we're looking to achieve here. Vanadium pentoxide, particularly for large-scale energy storage, and of course fuel. We're pretty much out of Australian production of fuel at the moment, so it's a significant project, but we only see it as regionally significant for the oil component, globally significant for the vanadium component. So here's some of the highlights from our recent scoping study. So we've got a post-tax NPV of 1.1 billion, IRR 16.3, and a payback period of 5 years. And the OPEX cost for oil puts us at about 58 cents a litre, and for vanadium about $5.80. And to keep in mind, we are looking to do a 99% plus grade of vanadium pentoxide, over and above what would normally be steel grade. We've got a $791 million capex ex contingencies and owners' costs. So it's a significant project, but we think it's got significant outcomes as well. There's more detail here to the scoping study. I think the highlight of this is vanadium is still weighted positively in this project, 55% for oil. For vanadium, and about 45% for the oil component, and that gives us, over the 30 years, a 21.1 billion dollar revenue. So here we are at Julia Creek. We're very well located. We're just south of the highway. We're intersected in the north section of the project where we're actually doing the industrial precinct. So that's the road and rail across the north there. That's the connector between Mount Isa and Townsville. That's the Flinders Highway and the heavy gauge rail. We've got two road frontages to this project as well. The green area that you see there is the renewables project area that we sold earlier this year. And that mine pit that you can see there is the first 30 years of mining. We do have over 100 years of mining in this project, but that's the first 30 years worth. If we zoom out a little bit, you'll see the differences between the Western Australian material, and you'll hear Graham speaking about that very shortly. We're in a different laydown geologically. This is from an algal bloom, so it's from an inland sea, which does leave out a lot of the metal components that is going to make it a little bit easier for us to process. The global market itself, you can see that vanadium's just falling behind lithium there at the moment, and I think you'll see the growth in this market is going to be driven by the vanadium batteries. That's where we really see the opportunity here in Australia. Without storage, the energy transition just doesn't work. And in Australia, vanadium is the answer to that. It's a single element battery. which means you only need vanadium. You don't need nickel, manganese, cobalt, or anything else. It's just vanadium, and we've got a lot of it. We've got over 30% of the world's vanadium here in Australia. And these batteries, as I say, they're extremely well suited to Australian conditions. They can go up to 30 years. The electrolyte that's produced to run these batteries has less than a 1% degradation over a 30-year period. So you can actually take it out of one battery and move it into another. This battery is almost completely recyclable. It can charge and discharge at the same time, so it's fantastic for load leveling in the grid. China is really ramping up their vanadium battery program. I think there's announced about 7 gigawatt hours of storage. To give you some idea, about 10,000 tonnes is we described here as being a total output for a year. That's 1 megawatt hour of storage. So I'll give you some idea of the scale of the not only the challenge but the opportunity, and that's where we see it. So I won't go into too much detail about the processing, but this is all about beneficiation at the front piece to reduce the amount of flow through the two processing routes. So 5.1 million tonnes, only 440,000 tonne of that goes through the oil circuit as a concentrate, and then 1.1 million tonnes goes through the vanadium circuit. And as I said, we're looking for high purity vanadium. Powered by renewables, what we do is we produce a hydrogen donor solvent from green energy, and then we turn that into as I say, a solvent that can be stored ambiently, and then we use that in the process for the oil extraction. So it's quite a green way of doing this, and we've always had a keen eye to the environmental outcomes of this project. When you're doing oil, I think that's it's an imperative. We built a pilot plant to demonstrate this, and it did exactly what we asked it to do. So we can get 180% yield based on the modified Fisher assay, which is the way the in situ value of the oil shale is measured. It's a little bit of an old way of doing it, but nevertheless, we can consistently get 180% of that number. I mentioned the power project. So we designed a 1 gigawatt renewables project because we have the copper string network running right through our project area. So what we did is we put up the measuring equipment early. Back in 22, we put up that METMAST, SODAR, solar equipment, because you need 12 months of that data to go forward with any sort of renewables project. So we bit the bullet, we put that hardware out there, we collected that information, and then we sold that as a package to NL Green Power Australia, which is a 50-50 partnership between NL Green Power, which is the Italian developer, and IMPEX, the Japanese oil and gas conglomerate. NL is one of the largest wind developers globally, and they're getting into vanadium batteries, so there's some synergies there. We also have a little project where we're extracting vanadium from spent catalysts from the sulfuric acid industry in Queensland, and we're the first to produce a 99.93% V2O5 purity on our first pass from an industrial waste stream. So it's a circular economy project. Strong support from government for those initiatives, particularly around that recycling piece, but also for primary development. The area around Julia Creek and Richmond now is a priority development area, and that's being supported by the state government. Project timelines, spoken about what we've achieved over the last 12 months. Moving forward, we'll be moving, we're doing some of this work now with optimisation with UQ, then we'll be moving directly into PFS, and we think that will be a compressed piece of work for us because a lot of the work we have done already would be regarded as PFS work. So thanks very much for listening.